Hello, everybody, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 131, taking place on Thursday, March 4th, 1700 UTC. Yeah, as usual, I'm joined by a bunch of Maker folks and others which are interested in Maker protocol and governance and or risk. So yeah, we've got an agenda to get through as per usual. We've got the regular updates. We've also got a another MakerDAO monthly financials presentation from Ventures later as well. Should be good. Well, hopefully be good. So yeah, I guess just going over the usual preamble. This is meant to be an interactive meeting. So if you want to comment or ask questions, please do. We'd like to hear from people. Kind of breaks up the call a little bit if people chime in, so which is kind of nice. All right, so I guess with that, I'll move on from all the hosting stuff and get into governance. So let's see. So we had two executives pass, I guess this week. We had last week's executive, which lowered the PSM fee out from 0.1% to 0.04%. We had, so also included in the executive was onboarding Uni V2 DAI USDT liquidity pool tokens. So yet another Uniswap liquidity pool vault type. We also increased the ETH and ETH stability fees slightly to 5.5% and 9% respectively. We also had like an out of schedule executive on Monday that we ended up putting up because we're a little bit concerned that if the market did take a turn for the bearish, then we maybe wouldn't have enough stablecoin facility available in case people needed, in case people wanting to close out the vaults pushed DAI, pushed the demand for DAI up temporarily. So that was mainly out of abundance of caution. But yeah, hopefully we won't need to worry about it for the time being. For clarity's sake, that executive increased the PSM USDCA debt ceiling to 1 billion and reduced the USDCA debt ceiling to 0, which is along the lines of a signal that Shuki, or Tim Schupner did. All right, so that covers executives for last week, or I guess for this week. So we also had polls this week. There were 4. We had ETC onboarding. ETC being another ETH collateral vault with a higher liquidation ratio but lower stability fee, which passed. We also had a poll to increase the ETH target available debt, also known as the gap, from 30 million to 80 million. So we saw a couple of times that in periods of high demands that the ETH vault was maxed out temporarily. So increasing the sort of target available debt should reduce the number of situations where that's the case. We also saw a collection of auction parameter updates pass. There's quite a lot in there, so maybe we won't go through them all. But in general, just some parameter tweaks to make attempts to make auctions, or to keep auctions happening efficiently, but also allow us to auction more collateral in a shorter amount of time. And then finally, we had to poll for on the statement, MakerDAO supports EIP 1559. We kind of discussed this a little bit over the last few calls, so I won't go into it in too much detail. But this is an Ethereum improvement proposal that should hopefully benefit the entire ecosystem.
Just not miners.
Just not miners. Or maybe not miners immediately. So the executive this week will include the ETH gap change. It will include the auction parameter updates. It probably won't include ETC, and also we will have, or should have, real assets 001 onboarding. So this is the success facility. I'll let Chris kind of discuss more about that in detail in this section, but we'll get there in a minute. So in terms of GovAlpha updates, so updates, or I guess governance domain updates at this point. We've been continuing to work on source grids, and there are a couple of tweaks that we want to, or a couple of possible tweaks we want to be able to make, which we're kind of working through at the moment. Work is continuing on the MIPs portal that we showed off a couple of weeks back. And kind of continuing, well, hopefully we'll be continuing work on the parameter documentation, specifically around the introduction of liquidations 2.0, with the goal of having the major liquidations 2.0 parameters documented for governance at the point they need to vote on them. We also had kind of a discussion around improving the readability of MIP 0 and helping make the MIPS process more accessible, which led to a couple of action points that we're going to be working on over the next few weeks. And we also took, well, also spent a couple of days kind of brainstorming on the executive copy that goes up with the executive votes, attempting to make it more readable and more kind of, I guess, efficient in terms of where the important things are placed. So we'll hopefully use that this week and see if, well, hopefully no one will hate it. All right, so now that covers my governance parts. I believe Pros is going to give us an update, or give us governance glance, and give us an update about what's going on the forum.
Yeah, absolutely. Just threw up the link in case anyone wants to follow along. But another exciting week here at Maker. We're sitting at an all-time high in DAI supply again, just north of 2.5 billion issued, which is really exciting. The most recent rates adjustment to the ETH vault types has brought annualized revenues to about 95 million DAI a year. Again, a very exciting kind of all-time high number. And despite the volatility, we're still looking really good on DAI maintaining its peg. So I threw up a little bit of a chart about the trading numbers there if you wanted to take a look. We do have some announcements in case you missed them from the forum. Really like the visualization website of what's backing my DAI, and interactive visualization put together by a new user on the forum. And really cool stuff there in terms of like actually seeing what collateral would be behind your DAI should an emergency shutdown happen. Friday's governance review, or February, sorry, not Friday, ahead of myself. February's governance review also went up this week. So if you're looking back on all that we accomplished on February, it's a great place to start. We got a few active discussions going on in the forum. I will say so far that a lot of the conversations and a lot of the topics we're interacting with are MIPS proposals. So David or Charles will be filling us in on those later, but do encourage people to go interact with those as well, even though I won't be highlighting them here. We got a pretty cool thread going on, question was posed, could DAI be short squeezed like GameStop? And I just found it a really interesting thread to go through and read about some market dynamics. And likewise, there is a inquiry in terms of how the NS drop and 6S implementation was going for real world assets. So we got some updates on that thread as well if you wanted to plug in and give some thoughts. We've got 2 active signal requests right now. One of them just went up from Aaron about adjusting a couple of the parameters, specifically the bump and TTL parameters of flap auctions. So those are our surplus auctions. We recently had a little time here where we did do some flaps, and you know, in light of changing all the other auction parameters, and not all of them, but at least some of them, it will be interesting to look into the flap auctions as well. And then Monet Supply's signal about adjusting the dust parameter is still alive as well. Voting ends on that on the 10th of March. So make sure you give your opinion if you got thoughts. And that's all for me.
Oh, Pros, really quickly, in the chat, Tim Schupener said there's a missing active signal.
Sorry, I forgot there is still one I'm having.
Awesome. No, that's a good one. Looks like it posted here for the Ethe DCIAM line.
Once again, 5th time this year. So maybe we can make a big jump here. Please go voting.
Awesome. And I'll update the governance at the glance to make sure that's there in case anyone wants to use that for reference later. But yeah, all for me.
Great. Thank you, Peyton. I guess with that, we can move on to smart contracts. Chris?
Sure. Everybody, Chris, Smart Contracts. So there's a bunch of things I usually cover, like the collateral onboarding priority sheet. We didn't do any work on. No collateral assessments. No collateral to Covan this week. But well, I guess last week we already kind of mentioned that we put MIP 21 in Covan, and that we weren't really working on tooling, but we have developments on MIP 45, which is liquidations 2.0. So we got back the interim audit reports for Gauntlet, PwC, and QuantStamp, and we received those. Then we shared the results with those teams so that they could kind of, I don't know, like think, maybe outside of like where they were currently looking, and they could like maybe get ideas from each other's reports. And then we also responded to those reports and shipped a release candidate to into the liquidations LIQ-2.0 branch on GitHub in the DSS repo yesterday. So so now all of those audit teams have the sort of responses to their audit reports. And I should also mention that Trail of Bits has started their audit, and so they now also have the updated release candidate too. And so Trail of Bits is a little bit behind our schedule. I'll mention that we're prepping Liquidations 2.0 to go to Covan for next week. And we're gonna, right now, it looks like we're gonna ship it with Link as the first, as the first like collateral type. So if there's any sort of objections to that or feedback, I've reached out to the various stakeholders, and we think Link is probably like one of the better candidates to test with. So certainly let us know. And then there's also lots of coordination work happening behind the scenes on Liquidations 2.0 for like other teams. So working with the sort of foundations integrations team to work on reference implementation of the keeper and the contracts for that, and marketing, messaging, so thank you for everybody. I'm sure I've left out tons of people, but thanks for everybody that's participating. And then I'm gonna move on to MIP 21, which is real world assets. So last week we deployed that to Covan, and we had a flawless dress rehearsal of like actually using MIP 21 in Covan. So that's encouraging. And yesterday I deployed the contracts to mainnet and verified them. So now we've got all of the MIP 21 contracts on mainnet, and we're beginning to construct the spell that'll put that in. So that's what everyone can expect in this Friday's executive for like the sort of big ship is MIP 21. Now that's going to go out with, it's only going to have 1,000 DAI debt ceiling to start with. And we don't have any broker dealer addresses in the conduit addresses or the conduit contracts yet. But the 1,000 debt ceiling is so that we could sort of test the facility if we need to, but we'll likely need to ship one more change to get a broker dealer address so that we can actually make sure that the sort of pathing works, that it goes out the same dress rehearsal we did at Covan, except having a broker dealer in control of it instead of like one of our devs. So and then for MIP 22, so Sam started kind of reviewing MIP 22 as well and diving into that. We're working with the Centrifuge team for 2 hours a week because we're in this crunch period while we work on Liquidations 2.0 and ship MIP 21. And so we're hoping to sort of at least keep things moving with that 2 hours a week. And so our team, I think, has our first session maybe next week with them on Wednesday. And then just as a side note for security, there's a set of what we call DEFCON spells, which are sort of pre-canned responses to emergency scenarios. Those have been updated now to be more generic so that, they don't, whenever we add a stable coin, it doesn't just like, we have to replace them all. And also updated because they hit their expiration. So all of those are now deployed and on mainnet and ready to go. So if we did have an emergency, we have like a few sort of like trigger the circuit breakers style pre-canned actions that we can fire. And then I'll mention we were talking about FC last last week for going in this Friday's executive, but because of everything that's happening, I think we're going to ship FC in next Fridays. We don't typically like to put a collateral in with a MIP. I mean, I know we did it in December, but it was really stressful, and I think that's how errors are going to get made. And then finally, there's a RFC submission for the smart contract domain team budget in the forums, which maybe Derek will want to talk more about, but if anyone has questions, we can also talk about that later.
Yeah, I can do a mini plug on that one, Chris. I don't know,
yeah,
do you want me to jump in on that now or cover that with David at the end when we do MIPS?
If there's something brief, you can maybe do it now. Yeah, we can come back to it.
Yeah, cool.
Later.
Okay, awesome. So yeah, there's two MIP submissions. One is the smart contract MIP 39 core unit application. This one is in RFC. So in this MIP, I cover off responsibilities, team philosophy, and our proposed mandate, which covers a whole bunch of topics, including security and safety of protocol, engagement with the community, collateral onboarding, so around protocol growth, protocol evolution, around adding new functionality. We also include research and development, along with tooling and automation initiatives. So that's the first MIP that defines the mandate, as you guys know. And then the second MIP, this one's generated a whole lot of really great for and against discussion in the forum today. I put it up last night, so it's really awesome to see all that conversation. This one is the smart contract MIP 40 budget application, also in RFC. This one documents the budget to support the team mandate, and I've included rationale around what went into this proposal, what sort of led up to it. At a high level, it's for a team of 10 to 14 employees. It covers all operational costs, audits, overheads, that sort of thing. It includes a DAI budget as well as an MKR vesting proposal. So yeah, my main point of mentioning this is just that it's in RFC, so we want as much discussion over the following month so that we can align with what the community is comfortable with, explain, break it down, and give more explanation where it's needed before we lodge it for the plan is for formal submission at the end of the month. So yeah, thank you everyone.
Great. Yeah, thanks for that overview, Derek. Chris, did you want to show the liquidations 2.0 timeline now, or?
Yeah, I'd be happy to do that. Let me turn the video off. My internet connection's not great, and I think you have to give me screen sharing capability.
Yep, which did you should be good.
Okay, share screen. Yeah, let's just go with that. All right, can everybody see this? Actually, I might be able to blow it up.
Yep, we can see.
Yeah, too many blow-ups. There we go. I don't know, Water, did you want to make any comments about the, in particular about this?
Well, I actually think you already mentioned most things. It was just to give people a visual guide as to all the things that are happening.
Yep. So, I mean, here we are today on the 4th, and you can see the final reports for Gauntlet and PwC are expected on Friday. We've got another final report on Monday from QuantStamp. Covan deployment Monday or next week, so. And you can see the sort of, trail of bits and whatnot. So I don't know if anybody has any questions about it, but this gives you an idea of the sort of flurry of things that are happening around Liquidations 2.0. Anyone with governance expertise should fact check our timeline for governance here.
Yeah, I may do that offline.
Yep. Yep, that sounds great. All right, I'm going to yield back to you.
Cool. All right. So I think that brings us to oracles. Nick, are you around? Yeah.
Yeah.
Awesome.
So the team has been making a lot of progress lately. In particular, we have a new kind of testing staging framework that is much more kind of scalable and thorough than we had before. So we can kind of spin up new kind of staging environments on the fly and in parallel, and they have they have their own chain, and they have their own kind of a Grafana dashboard. So it gives us kind of a much more granular view of to be able to test things before we send them live. So that's been kind of some technical debt that's been building up for quite some time. So I'm really happy that we were kind of able to knock that down. So now we kind of have like 4 different Oracle bills that are kind of in testing in parallel. So what are those 4 things that we're testing? Well, one is the kind of patched version of Scuttlebutt that fixes this state size issue. So for those of you who recall back in November, right, we had a brief Oracle outage because there is a kind of state size limitation in Scuttlebutt. So it kind of just, after it hits a certain state size, it kind of just falls over and dies. So after doing some research, we realized there is no reason for this state size issue to exist. It's just a hard-coded value kind of deep in the Scuttlebutt code. So we've just bumped that value and have been kind of thoroughly testing this to see if anything would break, right? If any of the dependencies are limited or affected by the state size. But so far, we've been testing this for I think about 6 weeks now, and everything looks really clean and good. So that's one of the things we're testing. Another one of the things we're testing is a tool called Gopher. Gopher is a tool we made to minimize our dependency on any single component in the Oracle stack. This is kind of one of the design goals for the Oracles, where we want to have redundant components for every single piece of the Oracle stack. So if ever there is a bug, or if anytime there a single tool kind of fails, that there is always a redundant backup. What Gopher is, it's a pricing tool. So it's a tool that we use to get the prices of assets, and it serves as a redundancy for an existing tool that we have called Setzer. Then one of the third deployment that we have is a tool called Spire that basically integrates libp2p into the Oracles. So libp2p is a kind of peer-to-peer gossip type of network. So it's going to be a redundancy to Scuttlebutt, which is what we currently have. So again, right, this theme of redundancy. So that's been code complete for quite some time, and that's in staging as well. So we have quite a few, and then we had the Starkware layer 2 Oracle release that we just did last week. So that's going to be go live with DYDX's mainnet launch that's coming up shortly. So we actually have a ton of releases coming up, and I think it's even though we haven't really had a problem with reliability of the Oracles, I think it's gonna make all of us sleep a lot better knowing that we have all of that redundancy. On the LP Oracle front, we got the report back from ABDK. We still have to go through it with a fine-tooth comb, but kind of glancing through it, there were no critical issues found, so that's good. So it doesn't seem like it'll need a complete redesign or anything drastic like that. I think they found a couple of kind of math-related issues in terms of, I think, like overflows or something. So we'll have to we'll have to patch those up. But the idea is that we'd fix those issues, or make our case for why we don't think they're that important, resubmit that to ABDK, and then they would create kind of a final audit report that can then be published to the community. So that would be one of the kind of blockers for raising the debt ceiling of the LP tokens out of the way. I say one of the blockers because the other one that we've kind of discovered over time, and I think Primož can maybe talk more about this, is the participation in the liquidation auctions for LP tokens hasn't been what we expected it to be. And so far with the current debt ceilings, it's okay. But raising the debt ceilings with the current lack of participation in these liquidation auctions is a little bit dangerous. So we kind of need to come up with a plan around that. Yeah. I'm also starting to look at Curve LP tokens. So I think there's quite a bit of liquidity in Curve. I've looked at from a design perspective, what needs to happen there, and it's actually quite simple. We need to write very little kind of custom code. Most of it is just calling a function that Curve has already made and audited and has kind of been battle tested. So I don't think that should take too long either. So that's kind of what we have to look forward to. Yep, and still working on the core unit proposal. Another thing is kind of gas costs. We or I guess the foundation had been spending an enormous sum of gas on the oracles, and it's just a matter of the fact that when gas costs are 300 gwei, 500 gwei, you can be spending thousands of dollars on gas in a day. So one of the reactions we did was lowering the sensitivity of the oracles substantially. We kind of only did this for the vault types that had relatively low DAI minted against them, because right, that's a little bit safer. So ETH and things like wrap BTC, those were completely untouched. But for the others, we lowered them from a kind of 1% sensitivity to a 4% sensitivity. But given the higher collateralization ratios for many of those assets, in our conversations with risk, it seemed like that change wouldn't have an outsized effect on the risk that the protocol was taking in terms of like collateral risk with liquidations. So that's cut down our Oracle costs that we spend on gas substantially. I don't have any hard numbers yet, but just looking at the frequency of updates, it's looking like a lot better shape. So hopefully I can give like a more formal report and kind of our kind of plan of or strategy around gas costs going forward to the community fairly soon. And that's it from my end.
Great, thank you, Nick. Lots to kind of absorb there. Does anyone have any questions or comments for Nick? I guess I think everyone's excited to see the kind of Uniswap tokens. I guess the audits be done on the Uniswap token oracles. So that's kind of good news that that's coming along. All right, so let's maybe move to risk then, Primož.
Yeah. So regarding collateral onboarding, mandated actors, we agreed to focus on real-world assets at liquidations 2.0 in the upcoming weeks, which means we delayed onboarding of other collateral a bit. And therefore, on our side, last week, we didn't do any collateral evaluations. We did, though, make a few proposals last week. One was about auction parameters, which I believe was already mentioned in the last call, so last week. And it also seems that Maker voters supported this proposal. So I have already reached out to various Keepers ecosystems, such as MakerDAO, also made a bit of campaign on Twitter and elsewhere. So to let people, to let Keepers know about proposed changes, which should hopefully attract more of them. And to briefly comment Nick's concerns, we do hope that higher back value, so the minimum bid increase and the lower duration time of auctions could attract more Keepers bidding on uni LPs, but we can't really be sure until we test it. So it's really hard to say whether we are confident enough to increase depth ceilings. I would say no currently. But alternatively, what we could do, we could increase depth ceilings of uni LPs that have liquidations turned off. So, for instance, for DAI USDC, where auctions are just not a major concern. Mark also released a research on red Bitcoin. Was last week. The findings justify additional increase of maximum depth ceiling for red Bitcoin, which is currently at 330 million. So we proposed 500 million. And I think this was also mentioned in Shupi's recent signal request. We don't, however, support onboarding currently, onboarding of lower liquidation ratio red Bitcoin vaults because of the risks related to redemption cycle of red Bitcoin and just general high red Bitcoin leverage in DeFi ecosystem. So more than half of red Bitcoin supply is basically used for leverage. But also because we saw that lower liquidation ratio vaults such as HeatB don't do particularly well in auctions. So this is why we propose delay of onboarding lower liquidation ratio red Bitcoin, at least until liquidations 2.0 are released. This Monday, I think Long mentioned this already. I proposed an urgent executive. So last week we had a price drop in it. This caused some vault owners to deleverage. A lot of DAI liquidity was taken out of most liquid venues such as Curve. Consequently, PSM depth ceiling got fully utilized, and even USDCA depth exposure started to increase because people were already shorting DAI because they were expecting for us to react. And this is why I proposed an urgent increase of PSM USDCA depth ceiling to 1 billion so that we don't cause PEG to deviate from here and also to distract speculators from minting DAI from USDCA, which doesn't charge any fees. And then lastly, we had a rates group on Monday. We decided not to make any further rate increases for larger vault types, mainly because we had a bit of price correction in the last 2 weeks, and we don't want to overshoot with rates if a bit bearish sentiment might continue. And this is why we decided not to propose any changes for the time being, but still if opportunity to react during the upcoming month, if we just start seeing continuation of this bull run and increased depth exposure, particularly on ETH vaults. We did propose few rate changes though, mainly for uni LP vaults, where we saw that stability fee being charged were not very well in line with the fees being charged on ETH vaults. So we mainly decided to increase ETH LP pairs by 1%. And another reason to increase those rates was the fact that APYs on uni LPs are considerably higher than the current stability fees. And also because majority of the risk for uni LPs are currently in low participation of keepers and of keepers in auctions, so higher fee makes sense, at least from risk perspective. So I think that's all from our side. Again, most of work in the background is around liquidations 2.0, and that's it.
Cool. Thank you very much. So I saw a couple of questions in the chat earlier, and one on the forum. A couple of people are asking whether Vishesh will be sort of rejoining us for State of the Peg anytime soon.
I sure hope so. I have a call with him tomorrow, so I'll try to get more info. Where is he? Where's he hiding? Because I haven't seen him for a while. So I'll see. Hope so.
Also, there's a version of State of the Peg that's done every week by our very own Tim Black that's posted with the Maker Relay.
Yeah, but what's Tim's battery percentage?
It's not as low as Vishesh's, unfortunately.
We're going to need a different betting market, you guys.
Hey, Primoz, quick question for you with regards to WBTC. I was listening to an interview with Mike Novogratz of Galaxy, and he said that it was a question regarding WBTC coming to DeFi, and he mentioned that his institution buddies or connections are not interested in bringing their Bitcoin to DeFi yet because of the risk, right? If you think that Bitcoin is going to 10x from here, from 49,000 and change, why take the risk of going on something like Yearn and take on risk, which is a lot higher than Coinbase custodial services. From their perspective, less riskier than to open up a vault with WBTC. So how does your team, the risk team, analyze? Like, how do you guys feel about Bitcoin coming to DeFi, and why do you think that we're still at, DAI is only 10% made up of WBTCA? How do you guys look at that?
So I think compared to Compound, we have less red Bitcoin, but it's possibly because they had a lower liquidation ratio, which are they increasing it now? And then just in general, with regards to red Bitcoin, we did analyze counterparty risk, which is BitGo. I think Marco made this point that if something goes wrong with BitGo, and consequently with red Bitcoin, it's a huge systemic risk. So Bitcoin would have an issues on its own, all the exchanges could suffer. So that's about the counterparty risk, which I don't see as that huge, maybe. The other risk was just in regards to Maker was related to redemption cycle. So we basically looked at how much time it took, for somebody to burn red Bitcoin and get Bitcoin on their addresses, and it took quite a few hours. And that could be one of the issues for Maker, where we have liquidations and Keeper want to recycle capital, and then it could take more than 6 hours, to get Bitcoin, including the transaction times, to transfer Bitcoin to exchange and then convert it back to stablecoin. So this was our main worry in regards to Bitcoin. To red Bitcoin, just trying to limit debt ceiling, and the other one was just the thing that I mentioned, that a lot of red Bitcoin is used for leverage. So when you're going to have these liquidations, cascading ones, normally the other platforms such as Compound and Aave would probably liquidate first, right? Because they don't use OSM. So a lot of red Bitcoin liquidity could disappear. And then when Maker auctions start happening, it could be a pain for us. So yeah, that's that.
So you think Bitcoin is far away from being part of DeFi, in your opinion?
Oh, no, far from that. I think it is part of DeFi. It's just not on the same scale as Ether.
Got it. Thanks, man.
All right, let's maybe move on. So that brings us to Seb with Reward Finance. Seb?
Yeah, sure. So on the collateral side, we are on the starting block to review the documents of 6S. The MIP 21s will be live very, very soon. So that's pretty good news. We have made some progress on reviewing the document for consult rights. They are quite similar to New Silver, obviously, because both collaterals are centrifuge. There was some minor difference, and there will be a post in the forum, I guess, next week. We made some progress with the people company in the negotiation phase, so to reduce the risk for the protocol, because it was a bit too risky for the taste of the risk, the initial proposition. So we are trying to find ways to make the deal easier to swallow for us. But it's a great collateral, and I still love to go farming. And thanks to the real world asset airline, you can go to Phuket very soon. There will be a hotel for you. You can see that in the forum. But this deal is a bit more complex, so I'm not sure we will be able to address it in the few months. Outside of collaterals, so there was a lot of discussion on many prospects for collaterals and all those collaterals that are already in the pipeline. But outside of collaterals, there was some work in the accounting infrastructure. So the presentation I will present later is still based on Dune analytics, but we run some problems with Dune because, for instance, all the calls of functions that have no parameters are not in Dune. So it was not possible, for instance, to get the amount of dice that are stored inside the DSR. So you see, as we have increased the DSR, we want to have this information. So we have studied to use a DApp query, but it's still an early stage project, but very interesting as well. So we will make some more progress in this direction. So maybe if other core units are interested to have analytics on the on-chain data, so maybe we can team up together. There is also a cool project from the Maker Foundations, but it uses GraphQL, so it's a bit complicated to use, at least for our point of view. But maybe we can put that inside the database and get some cool analytics. And lastly, we are still working on how to scale SVPs. So SVPs are the special purpose vehicle we are using to store assets in the real world. So the issue we have currently is that how can we be sure that people will not do something wrong inside those SPVs, because currently they are managed by the asset originator. So there is a lot of solution for that, but the space is quite complex. And we are working with the centrifuge, the asset originator, and all the parties to find the best solutions that are cost effective, because usually we need a lot bigger asset under management to be cost effective to add more third parties. And that's about it on my side. If you have some question, please feel free to ask.
Perhaps no questions just now. I'm sure there'll be comments after your presentation later. But for now, let's move on to operational support. Juan, you got an update for us? Yeah.
Yes, update, so we can get on with the rest of the agenda. So
Can't hear you super well there, Juan.
Can you hear me now? Not really, huh?
A little better.
That's better. Yeah.
Now?
Yeah, that's probably good.
Okay, so yeah, as I was saying, Amy is out of the office for the week. She was or she is relaxing, so hopefully she can get new batteries and energies. But moving to the Know Your MIP, we haven't had anything yet. We are negotiating with Shupi to get the Eurodai declaration of intent. So as soon as he gets something going, we will publish the agenda. So yeah, that's on the Know Your MIP section. For collateral onboarding, we haven't had any calls. We are, yeah, mainly because of what Seb and Chris already mentioned about the MIP 21. But Matt Rabinowitz has posted the 6S state of the business. So it's a very interesting post if you want to check it out. And for collateral, well, it's not onboarding, but Tadeo has made this cool visualization that Pros mentioned before. Moving to the core unit updates seen. Just remember that all this information we try to kind of like keep it together in the core unit.makerdao.network, so everything's hopefully they're up to date. But yeah, we have had yesterday with Nadia and her whole team this core unit launch pod sessions where she and her team explains what they are trying to do. And next Wednesday, we're going to have the governance alpha team. So Long Pros, Eli, and Pablo are going to be joining us there. So yeah, exciting. The agenda is already out. And last Monday, we have had Notice Safe. So we're trying to kind of have these tools that potential core units are going to use, and be able to see what they are, what their features are, and how to set them up. So again, the video is out there on the forums if you want to check it out. And then yeah, a little bit of action on the core units being proposed. Derek has already mentioned it, but he's proposing himself as a smart contracts core unit facilitator. Hopefully we can have him in one of these calls soon. And Coulter has proposed a draft for a swag MakerDAO store. And then we have Kathleen for strategic marcoms. I'm not sure if that one we have mentioned already. And then GovComs, Mr. David Utrabin and Oracle's Nick. Yeah, I'm not going to go through the interesting topics of conversations, but there's a lot of things happening, and we're working towards making this transition as easy as possible. Are there any questions?
How many core units do we have now, like either proposed or in the process of being proposed?
Let me check. But I think there's 4. Yeah, so there's 3 in formal submission, governance alpha, risk, and real world finance. And then in RFC, we have growth. So there'll be 4. And then we have a lot of being drafted, but I don't know. I don't know how long those are going to be in draft for.
Cool. Definitely seeing come along, so that's pretty awesome.
Totally.
All right. Any other questions for Juan before we move on? All right, I believe that brings us to MIPS. David, is this you today?
I think it's actually the community development team update before me.
Yeah, I was going to say there's not a whole lot of updates this week for community development. A lot of community members were just working on drafting more core units. We did a retrospective last week on the hackathon that I shared a little bit about. Not too many news there, so just a lot more to look out for in the forum for any core units being proposed from community development.
Great,
sweet. Yeah, now I could take it.
Yeah,
give me just 1 second. Yeah, okay, cool. All right, let's present here. Okay, should be able to see my screen, so let me launch into it. Hey everybody, happy March. Welcome to the weekly MIPS update. My name is David Utrobin. I am a community development lead at the Maker Foundation and have been acting sort of as an interim MIP editor. And so yeah, here's where we are today. Let me actually move that. Here's where we are today. We're in week 1 of March. The March governance cycle just started. We actually had the end of formal submission yesterday. And so, yeah, looking forward to a busy month. So here are the basic updates. The formal submission ended yesterday. 10 MIPs and 11 subproposals have been formally submitted. So it's going to be really, really active governance cycle. The inclusion polls begin this coming Monday, March 8th. And yeah, and so let's get into it. So here are the formally submitted proposals. We have the entire core unit MIP set being proposed. We have 3 core units being proposed. That's the real world finance, the risk core unit, and Gov Alpha, also known as just the regular governance core unit. And so yeah, we have 3 full-on proposals going along with that MIP set. So really exciting to see. There's a couple of core unit related amendments, and they just make sure that the core unit MIP set and MIP 0 and MIP 16 are kind of aligned. If you're interested in exactly what's being changed, you could read these descriptions in the slide, but I'm not going to spend too much time reading them out. We also have a number of standalone MIPs being put up. So we have Alan Niemberg. I hope that's probably not his last name, but we have Alan from Yield Protocol. His MIP 43 term lending module has gone into formal submission. The MIP 45 liquidations 2.0 has gone into formal submission. And then finally, the MIP 46 parameter proposal groups has gone into formal submission. And then also we have a number of payment related MIPs. So we have the KEG streaming payments module MIP. And then we have MIP 48, which is streaming payments via the KEG. So one is the technical implementation, and the second one is more the process behind actually interacting with the KEG. So both of those are in formal submission for March. And then lastly, for this category, we have MIP 47, which is the MakerDAO multi-signature wallet management MIP. And it defines just some requirements for multi-sigs at Maker. Yeah, that's it for all the formally submitted proposals and sub-proposals. We have a couple of proposals in conception, which one is MIP 44. It's a generic vault solutions for all tokens with a reward. And then we have some core unit stuff in conception as well. So we recently had a group of actually community development contributors put forward the content production core unit, and it is largely like a marketing core unit, and so really exciting to see that come out. And that's it for conception. But for RFC, we have quite a lot still. I believe it's 21 different MIPs and sub-proposals in RFC. So yeah, definitely no lack there. We have the governance contract redesign, the active reserve AMM, the Maker stability price module. All of these have been around for quite some time, so won't linger. We also have some other payment related MIPs in RFC, static reserves for governance, governance awards, proposed compensation addendum for MakerDAO contributors. All of these are still in RFC. We have a few PSM related MIPs in RFC. They have been in RFC for quite a while, so won't stick around here too long. And then we have another 3 core units in RFC, one being the growth core unit that actually did a presentation and a call yesterday. We have the smart contracts core unit, which I just saw posted their stuff today in the morning. Or yesterday, really great to see that. And then lastly, we have the shop core unit, which is actually a MakerDAO swag shop. And one interesting thing about this core unit compared to all the others, this one doesn't actually have a budget in the like the same sense that all the others do. This one is actually proposing to do profit splitting and pay the protocol to be able to do the swag shop. So definitely check that out as well. It's definitely a special case with regards to the budget MIP. So yeah, moving forward. We have one core unit related amendment. This one didn't make it in with the MIP set for the March governance cycle. That's the MIP 24 amendments. And so Juan left that open for RFC for a little bit longer because there was some back and forth about the changes. There's a couple of declarations of intent that are in RFC, one for onboarding a new collateral type backed by B protocol, and then another one for doing research and analysis around Eurodai. Yeah, and then just 3 standalone subproposals, one using the old onboarding method to onboard myself actually as a MIP editor but I may have to withdraw this if the core unit MIP set passes, because MIP editors will no longer be voted in. Instead, they're actually going to just be appointed by the governance facilitator. And then, yeah, we have some MIP4 amendments that help new MIPs that have recently been passed make changes using the weekly governance cycle rather than the monthly governance cycle, giving them more flexibility for changes shortly after they're passed. And then lastly, some more MIP0 amendments. And I'm blanking on the specifics of that one, but yeah, feel free to look it up in the forum. They're all there.
MIP sets, I think, is that one, right?
Yeah, I believe so. Yeah, you're right. You're right. I think it's introducing the concept of MIP sets and like formally define them and some stuff like that. And then yeah, so pretty much the same pre-MIP discussions. This has actually not been like a super active part of the forum, at least lately. So yeah, nothing super new here. And with that, happy March, everybody. And yeah, that's the MIP update for this week.
Great, thank you, David. So since we're back to doing governance cycles, I now need to do the MIP submission review. So I'll just essentially go over the same MIPs that David just went over very briefly. So yeah, we have a bunch in formal submission. We've got so because there's so many MIPs in formal submission this month, we're going to group some of them as like sets, just based on, I mean, A, ease of use, and B, because they're like functionally related or whatever. So the first group is going to be the KEG MIPs that David mentioned, so streaming payments via the KEG and KEG streaming payments module. We're going to group the core unit framework MIPs and the amendments directly related to that. Then we've got 4 separate ones. We've got the terminating module, liquidations 2.0, parameter proposal groups, MakerDAO multi-signature wallet management. So all of those will go in separately. And then we have the sets of sub-proposals from each of real world finance, risk, and governance, GovAlpha, and they'll go in a group of like, so there'll be 3 groups, 1 for each of those core units. And yeah, all those the MIPs that have been formally submitted, as far as I can tell, they all meet the requirements. So yeah, we'll have a somewhat busy March. Yeah, looking forward to it. All right. I believe that brings us to back to Ventures to give us an update on MakerDAO's financials. Zeb, you're on.
Yeah.
Just
Can I
give you
share my
permission.
screen?
Yeah.
Yeah.
There you go.
Yes. Okay, so here we go. So financial position for February. The usual disclaimer. All the data, most of the data are coming from Dynanalytics, but one slide was added with data from MakerBurn, because we like MakerBurn. Okay, so let's start with the monthly results. So as you can see, we are making great at any KPI possible, except the last one, which is a maker price, because we love strategic patience. So net interest income, so the difference between the stability fees we are earning and the DSR is up 92% this month versus last month. So this is insane. This is thanks to the increase in loan demands and higher stability fees that was proposed by the rate setting group. Another item that is interesting is the net trading income. So it's mainly it's only the PSM. So it's increasing a lot as well. So it's starting to become a new business line for Maker, which is a very good news. The only drawback is that currently we are only getting USDC inflows, but not outflows. So it's only one way, which is not perfect, but maybe this will change in the near future. Last third line, it's a net liquidation income. So January was quite volatile and there was a lot of liquidation, but that was nothing compared to February. Let's hope that it doesn't repeat in March, because we made a lot of money in liquidation, but it was a close call, I would say, before we would have some losses. At least not everyone was super calm. Regarding the workforce expenses, so this line is getting bigger and bigger, and it will continue to increase. So this month there was the first interim multi-sig of the monoty elector expenses, mainly related to the PSM. And there was also some gas asked for smart contract development. I think it was executive of last week, not sure about that. And there was an incoming donation from a donor. So if many people want to give back to the MakerDAO, you can by sending. You can do that by sending a DAI inside the interim multisig. But it's still a small amount, the workforce expenses. So net income is increasing a lot, doubling actually. Recurring income is a bit less because most of the increase was in trading and liquidation income, and those are not used in the recurring income. And as I said, the maker price was not flat, but quite a good increase actually, but not as much as the rest of our financial results. So just a visual representation of all those income and expenses. So you can start to see the workforce expenses here, the purple line, but it's still very small. What is super interesting is the net interest income. So it goes bigger and bigger every month, almost doubling every month. So this is a good trend. Not sure we can do that again next month, in March. You can see that the net trading income, which is the stablecoin management, is decreasing, but it's expected, as in September, October, and November, it was mainly the USDC vault with the issue we had on the peg, and the net liquidation income that is huge in February, but let's hope we don't see that more often. Lending income, so zoom inside this activity. So as you can see in the chart, though, this is the lending income only, it's not the exposure, it's the income. So the blue part is ETH. So we have 75% of our lending income that comes from ETH. So this vault facility is becoming more and more important for Maker as we move forward, which is not a good thing because we prefer to be diversified, or at least that's my opinion. Wrap Bitcoin is also getting a bigger chunk, and all the rest of the vaults are getting not much, I would say. The purple line is the average yield we made on the vault facilities. So excluding all stablecoins that are not in this slide, we are still increasing. So this is because we have increased stability fees, mainly for ETH and other as well, as those few last months. There's something else to show. So yeah, so our loan exposure, so without the stable coins, there is a 43% increase since last month. So we have added a lot of collaterals on our balance sheets. Trading business, so that's mainly stablecoin and mainly the PSM starting January. So it's increasing a bit, and we'll see if it moves forward in the future. One interesting thing is that our stablecoin exposure is growing for 42%, which is the same, not quite the same increase as the other collaterals. So it's increasing a lot as well. Liquidation, I said it was a volatile month, so we had a lot of income from liquidation. A new slide which is the balance sheet and the asset part of the balance sheet. So you can see that since the beginning, the margin loans, which are the crypto vaults, are increasing a lot, and trading assets, which are mainly the PSM and all the stablecoin vaults, except USDT, are increasing, but the share of the trading assets is decreasing over time, and not moving since last month, but still decreasing over time, which means that we are less and less exposed to those stablecoins in a relative shape, at least. A view of the stablecoin. So, as I said last month, the most important point for Maker is to put DAI in the top one stablecoin used on DeFi. Sadly, I don't have the slide for that, but we are now on market cap, the 4th coin on DeFi Pulse. We are no longer in the top 3, but I present the transaction volume because it's more interesting, I think, to see how much people are using the coin and not just farming with it or doing nothing. So transaction volumes of all stablecoin are still increasing, which is good. It shows that DeFi is still a thing. You probably have see that in your wallet. And in market share, we can see that this month was very good for DAI because we moved from 12% in January to 17% in February. So if these trends continue, it means that we are gaining market share on the stablecoin business. Obviously, the big loser is USDT, which is becoming smaller and smaller. More likely, there is a conversion from USDT to BUSD, and USDC is stable over time. So we are gaining market share, which is super cool. And let's hope we can go above 23%, which was the highest market share we had in the history. So it's only for the Ethereum chain, obviously. Slide on risk. So the surplus buffer has increased a lot thanks to all the fees that we have generated and that we have put in the surplus buffer. Assets have increased a lot as well. Risk-weighted assets, so it's just we take all the assets we have on the balance sheet and we divide them by the risk on them. So stablecoin have no risk in this model, and ESB has twice the risk of the rest. Leverage ratio, I will show that in this slide. So this slide was slightly updated because I used now the surplus buffer data from Dune Analytics. So there was some differences at the beginning of the chart, but nothing to. So leverage ratio, the blue line is just the total DAI exposure, so the total asset exposure, so the DAI number in DAI-Stat or MakerDAO. The surplus buffer divided by this number. So we can see that the risk is decreasing because obviously we have now almost half percentage of our assets that are representing as the surplus buffer. So that basically means that we can lose half a percentage of our assets and still not mint MKR. And if you use the red line, which is the common equity tier 1 ratio, which is the financial terms, that just means that we are using the risk-weighted asset and not just the asset size, because obviously it's quite difficult to lose money on the USDC, except if everything goes bad. Using this matrix, which is a bit different and more accurate, I would say, we can see that we are still gaining a lot of safety and we are approaching the level we had in November in the safety. So from a risk perspective, it's getting better and better thanks to the increase of the surplus buffer and the fact that the increase of the surplus buffer is faster than the increase of all risk assets.
Seb, what did you say the target was? What did you say the target was for that CET1 in banks? What do they typically shoot for?
For banks under Basel II, you should aim for 8%, but I wouldn't make any comparison at all between those two numbers because I didn't check in Solvency II how to write the numbers. because obviously when they made the norm, that wasn't crypto assets loans, so difficult to estimate. But you can use the leverage ratio, and the leverage ratio should be 3% for banks. So we are still a lot below, but I don't think our business is as risky as bank. I'm not sure. That's something we need to work on. I tried to see the model that brokers are using, like interactive brokers, because they have the same issue of balance sheet, and they are making a lot of loans backed by stocks and bonds. So it's quite the same issue, but it wasn't very clear what models they were using. So not too much to report here. But obviously their leverage ratio was a bit higher. I think it was 3% as well. There is legislation in the US that if you want to do a broker and give loans to your customers, you need to have 3%. So going on the valuation, now is a good time to buy. Now, more seriously, yeah, it's a really good time to buy, not financial advice, obviously. Why is that? Because the recurring earnings per MKR, so the net income I presented in the first slide, divided by the number of MKR token, which has slightly decreased this month, you are now earning almost $5 in this month per Maker token. And if you divide the earning per the MKR price, the yield annualized is 2.82%, which is a slight increase versus last month, because in the last month, even if the recurring earnings were increased by a lot, the issue was not an issue, but the issue for this calculation was that the MKR token was increasing even more. This month, the MKR token didn't increase much, by 37%, still not nothing. But our earnings were increasing at 90%. So obviously, it seems that Maker is more cheaper now than it was last month, and even more cheaper than in December. And the equity per MKR token, which is not super relevant at this stage, which is the share of the surplus buffer that is that belongs more or less to each MKR token, if there is not an emergency shutdown, obviously, is $11 per MKR token, which is the doubled since last month. And I have one last slide that I made just this afternoon. It was just to give an overview of what is the impact of the core units, because there is a lot of new core units that are going on the forum. And the question some people were asking themselves is, does it make a big difference in the earnings of Maker? Because obviously all those expenses will go inside the workforce expenses at some point. So I took the net interest margin that came from MakerBond, excluding liquidation, excluding trading income, PSM, stuff like that, because we are not sure it will be there next month. And deducted all the core unit expenses as proposed in the documents on the forum. I added oracles because it is expected to be significant, mainly because of the gas they are using to update the oracles. And so obviously this number is not 100% correct. For smart contract, they have a part of compensation that is paid in MKR token. So I took the price of today, which may or may not be relevant in the future. And for the rest, I think there was nothing more. Maybe I missed core unit because there are so many. So you can see that we start at 95 million annually before the core units. And after the core units, we are going to 68 million. So there is a drop, but it's not a 50% drop. Said otherwise, if we try to get the price earning ratio, which is the financial metrics that you are usually using to compare stocks between themselves, stocks in the real world. Not in DeFi, because in DeFi no one is using the expenses, workforce expenses usually. We will be the first, I guess. The price earning ratio will be 32 times, which is high if you compare to stocks in historically, which is because the price earning ratio historically is at 15. But if you compare that to another growth companies, another startups like us, it's really, really low because if you take Tesla, it's 200 or more. Zoom, it's a lot as well. Microsoft is 50 probably. And so it's, even with the expenses, it's not that expensive. And maybe I missed some other expenses, but and I don't know what else could. So if you have some questions or some point you want to make on this presentation, I sadly don't see the chat.
Yeah, oracles may make up more of that chunk just because of the cost of gas to update them.
Yeah, I have asked Nick, but just before the meeting, so he didn't have a clear view, but it could be in that ballpark, but obviously it depends on the price of gas. It can change dramatically.
Do you have a forecast that if the amount of DAI outstanding was 10 times greater, how much of these costs would be 10 times higher?
That's a good question.
Or what percentage thereof?
Well, if there is 10, let's say the ETH price remains the same and the gas price remains the same, I would say the expenses could be the same, more or less. Obviously, that doesn't work in real life, but because as you have more income, you increase the expenses. But it's possible.
I think it's a good, I guess my point is it's a good exercise for every core unit team to not only ask for a budget today, but then also ask if everything grows 10x or another 10x after that, how much budget will you need to sustain that? Oracle's is probably one of the greatest examples where the amount of their budget really shouldn't change terribly unless their business model changes. Marketing may change, real world finance may. It's a question for each unit.
Yeah, no, it makes sense. Again, it's super early because we don't have all core units proposed yet.
Matt, I was going to say the opposite, that Oracle is probably one of the only ones I would expect to go up if DAI comes from other, well, if it's being backed from other types of collateral types.
Fair point.
Then yes. Smart contracts, I would guess a bit more because we would have more code, maybe not 10x, but I don't know, a good 2-3x, or that would be healthy, at least for Brian and Chris. And I mean, the rest could grow a bit more, but I would expect the Oracle part to be actually the one that grows the most.
Yeah, I mean, the actual operating expenses of the protocol aren't that much, right? It's basically the oracles. Like if we kept everything the same, obviously we don't want to do that because we want to grow and do awesome things.
Not so much yet.
Yeah.
I do want to mention that the smart contracts numbers came out. I think they factored for 14 devs tops, which gives us space to add 4 or 5 new ones. If we do want to grow past that, I think the plan is to prepare a package, like one-off headcount package that we can reintroduce to governance to approve at that time.
Yes, that's a good point. It's only the budget I took, so maybe some budgets have some room to grow already.
Taking a step back to the leverage ratio stuff, I guess in your assessment, are we in a good spot? I mean, we're obviously about halfway to raising the surplus buffer to 30 million. And I'm also curious if maybe including like strategic reserves would help that number at all.
Yeah, so that's a good question, but I didn't find any clear answer yet. Actually, I was more focused on the liquidity side, because when we are doing banking, there is two risk issues. One is solvency. So when the surplus buffer goes negative, that's not good because you are minting NKR, and DAI holders can be a bit unsure about the future. And liquidity. Liquidity is when you go to your bank and you say, I want my money back. And you can end up with a bank run. So in Maker, my first assumption was that it was impossible because obviously DAI is not redeemable for anything except at emergency shutdown, but then we don't really care. But I found out that it's not correct at all. I was super wrong. You cannot redeem DAI, but what happened is that the price of DAI changed. When you look at your bank account, you have $1 on your bank account. It's always $1, but there is not $1 behind that because the bank don't have this $1. It's loaned to buy a house or anything else. So usually they have some liquidity reserves. And in our case, the liquidity reserve will be our trading assets, mainly the PSM, but other vaults as well if we convert them to the PSM. So actually having this buffer is a curse and a blessing. A curse because obviously we take the regulatory risk of USDC, but a blessing that is if all the DAI farming stops tomorrow, and most people using those DAI to farm want to go to USDC because they prefer USDC for any reason, there will be a lot of redeem, and this buffer will help us to take the hit. We will not have to increase the stability fees in a rush or stuff like that. And even if you increase the stability fees, it takes at least 2 days to be increased, probably more because you have all those governance things. So that means that the price of DAI can go below $1 for at least, let's say, 1 week, which is not very good for customers. So going back to this slide, so the solvency issue, it's super hard to define what is a good number, what is safe or what is not. I think it really depends. I think personally that at 1% we can be quite safe if liquidation 2.0 is solving most of the issue. Maybe we are even safe at 0.5%. I don't know. Maybe 1%. So I don't have the number in my head, but if we had 1% last year, we wouldn't have any minting with a Black Monday. But no promise here.
All right, we're getting close to 1:30. So does anyone have any final comments or short questions they have to ask? Seems like not. So yeah, I think we'll probably wrap up there. Obviously, let's discuss. So are you going to post this presentation somewhere on the forum or?
Yeah, I'm doing my monthly reporting for my team, so it will be in it.
Okay, cool. Yeah, so I'd encourage people to continue kind of the discussion on those posts. Also, there's a couple of things we didn't really get a chance to come spin back around to, like the smart contracts budget and various other things I may be forgetting. So yeah, as always, please continue the discussion on the forum. All right, but with that, I think we'll wrap up. So yeah, thank you everyone for coming and joining us. And I'll see most of you next week, I expect. All right, thanks everyone.
Thank you.